Today, we are zoning in on just one stock, a company that's, constantly in the headlines, Alibaba Group Holding, or BABA. Our mission here is to really cut through all that market noise and unpack a single, very urgent analysis that claims BABA has just flashed a rare golden buy signal.
That's right. I mean, the stock's been hovering around that 146 level. A lot of investors, they see this little pullback and they get nervous. They're thinking about regulatory risk or, more pressure. But this particular analysis report, it's incredibly bullish. It frames this exact moment not as something to fear, but as a critical entry point.
Exactly. So we're going to deep dive into the evidence they're using. What technicals are pointing to this so-called golden buy? What's the financial floor that they say will keep the stock from collapsing? And maybe most importantly, what's the hidden catalyst they believe Wall Street is just completely mispricing?
Yeah, we're really looking at the three pillars of their argument. You've got the technical retest, the rock-solid valuation, and this big AI growth story. The question is this really the perfect storm for buyers, or is the analysis, maybe a little too optimistic?
Okay, let's unpack this. We have to start with the immediate price action. Because if this is a golden signal, the chart has to be screaming it, right? And the report focuses so intently on how BABA has been acting right around this 146, 147 zone.
It does. It defines this recent small dip as a textbook retest, not a collapse. See, the stock had a really strong rally off the lows, and now it's just taking a breather, consolidating. The analysis zeroes in on $145 as the absolute key psychological support level to watch.
I found the language they use really interesting. They didn't call it a failure. They called it a fake-out drop. That sounds like jargon, but it's loaded with meaning.
It really is. When technicians talk about a fake-out drop, they're implying two specific things. First, that the drop happens on really low volume, much lower than average. And low volume on a pullback, that signals a lack of conviction from sellers. They aren't really committed to pushing it lower.
So the big institutional money isn't panic selling. They're just sitting on their hands letting the stock settle.
Precisely. And the second part of that fake out is the time frame. It's a quick retest, not some long, drawn-out decline. The stock successfully defended that 145 line. And the report, it explicitly says BABA is holding that level like a fortress, an impenetrable defense.
And that strong defense is so critical, isn't it? Because if a stock rallies hard and then fails the retest, the whole rally can just unwind.
It can, absolutely. But by holding 145, they argue the immediate technical risk is just drastically lower. And this successful defense is the basis for their golden signal. You have this clear pattern, a strong move up, a quiet pullback on low volume, and then confirmation at a major support level. In technical terms, it suggests the sellers are just, they're exhausted. And that clears the path for the next leg up.
But hold on a second. You can't just rely on charts, especially with a stock like this. It's so sensitive to news out of Beijing, to geopolitics. If the chart looks so perfect, why is the PE ratio still so low? Shouldn't a perfect chart already reflect good fundamentals?
That is an excellent question. And that's exactly the skepticism the analysis tries to tackle next. They basically argue that the chart confirms the timing, but the fundamentals are what confirm the value.
Okay, let's shift gears then. Let's get into those fundamentals, because this is where the conviction in the report really starts to build. Why do they claim buying BABA at 146 is like buying dollar bills for 80 cents?
Right, that valuation gap is the core of the whole argument. They bring up three main financial points. The first is the price-to-earnings ratio, the PE, which is sitting at about 19.6.
19.6, I mean, it's not dirt cheap, but for a global tech giant with that kind of market share, that feels surprisingly low. What's the context?
Context is everything. The analysis points out that its peers, especially other big cloud players like Amazon or Microsoft, they often trade at PE ratios in the 30s, 40s, even 50s. And even just compared to its own history, BABA's PE is, historically cheap for the kind of earnings it generates.
So the market is basically pricing in a huge discount. It's saying we don't trust the earnings, or there's a permanent risk factor here because of regulation.
That's the bear case. And the report does acknowledge it. But their counter-argument is that even with a big political risk discount, a PE of under 20 is just too cheap for a company with this kind of cash flow and market dominance. The discount is excessive.
So what's the safety net? What happens if that regulatory fear spikes again?
And that brings us to their second point. The balance sheet. They call it a fortress. The company is sitting on a staggering pile of cash reserves. We're talking over $70 billion US.
70 billion. That's an enormous number. I mean, that cash pile alone is bigger than the entire market cap of a lot of very established blue chip companies.
It gives them radical resilience.
Yeah.
The analysis says this cash mountain basically insulates them from any short-term economic shock. But stability is only half the story. The other half is what it does for shareholders.
The share buybacks.
Exactly. This cash gives them the firepower for an aggressive, continuous share buyback program. They're reducing the number of shares out there, and that proactively creates, an artificial upward pressure on the stock price. It's a powerful internal support system.
Is there a concern they might, spend that cash on some risky acquisition instead of returning it to shareholders?
It's a legitimate worry for any company that's flush with cash, but the analysis points to their recent actions. They argue the scale of the current buyback program shows management's priority is clear: support the stock and signal confidence.
Right, and while you're waiting for that value to unlock, you get that small dividend, about, 0.72%, just as a little bonus, just to wait?
It's the definition of a deep value play. So you have the technicals validating the timing and this cash-rich, low PE providing the floor. But neither of those things alone gets you to a $193 price target. For that, you have to look at the future.
Okay, let's move to that future growth narrative.
Yeah.
This is the crucial part. The analysis calls the X factor, the hidden catalyst that the bears are completely missing, the AI pivot.
This is where the story gets really explosive. The report argues that Baba isn't just an e-commerce company anymore. Its future growth is all about being an infrastructure and intelligence provider.
And the analogy they use is so important here. They frame Baba as the Amazon AWS of the East. Cloud is the engine. But what's happening in their cloud business that could justify such a massive re-rating of the stock?
It's all about AI. Specifically, the integration of Baba's own large language models. The analysis keeps citing the Qwen models. Now, for anyone listening who isn't deep in Chinese tech, Qwen is Alibaba's family of foundational AI models. They're open source, and they are built to rival the big global models, but they're tuned for the local language and for enterprise use.
And they're not just developing these models in a lab somewhere, they're actively weaving them into every single service they offer.
Exactly. This lets them sell higher margin services, not just the basic infrastructure. They're moving from selling, a basic service base to selling proprietary intelligence, and that's a huge deal for profitability.
This connects directly to the bigger economic picture they laid out. If Baba controls the main AI-powered cloud platform, they essentially become the toll booth for the entire digital economy in China.
They absolutely do. Any major company in that region that needs scalable AI-driven infrastructure, well, they'll have to go through Alibaba Cloud. That revenue stream, supercharged by AI adoption, is what they forecast will drive the real growth.
So the thesis is that the current 146 price is based on yesterday's story, e-commerce, and regulation, and it completely fails to price in the exponential growth from being the region's primary AI provider.
That is the core thesis, and it leads to a very specific and very high-stakes prediction for the upcoming earnings report, which should be late February. The analysis forecasts that cloud revenue is going to surprise significantly to the upside.
A surprise in the cloud numbers would be the proof the market needs. It would change the narrative from undervalued fortress to AI growth leader.
The report is very clear on this. If that cloud segment beats expectations, the market will re-rate the stock almost instantly. The prediction is that Baba won't just slowly climb from 146. It will, and I'm quoting here, gap up to $160 overnight. That jump would be a massive, immediate validation of this AI catalyst.
Okay, so we've laid out the whole case. The technical support, the fundamental floor backed by all that cash, and this Qwen-led AI catalyst that could cause a huge earnings surprise. What does the analysis suggest for an immediate strategy?
The report gives a pretty clear action plan. First, it points out that the big money on Wall Street is starting to come around to this view. You're seeing a visible consensus shift toward a strong buy rating.
Which suggests we're probably past the point of peak fear. Smart money is starting to get positioned.
And they're positioning for a big move. The report cites the average analyst price target, which currently sits around $193. From the current price of $146, that's almost a 32% upside.
32% is a very strong potential return. What's the tactical advice then? For someone looking at this opportunity right now at 146, what's the confirmation signal to watch for?
The advice is pretty straightforward. They frame this current level as a gift, a chance to accumulate. They say buy the dip based on that technical setup and the fundamental discount. The key technical trigger to watch now is a decisive, sustained move above $150.
A break and hold above 150. So that's the signal that the breakout is for real.
It confirms the pullback is over, the consolidation is done, and the next move towards those higher targets like 193 has officially started. The position at 146 represents, in their view, a really attractive risk-reward scenario before that AI catalyst really takes hold.
That was a tremendous deep dive. We've covered the three key pillars. The technical retest holding the 145 line, that massive $70 billion cash-backed financial floor, and the Qwen-led AI cloud catalyst.
And this whole bullish narrative, it really rests on two core beliefs. First, the incredible stability from that $70 billion war chest, the fortress balance sheet. And second, Baba's strategic position as that toll booth for China's digital economy, which is now being fueled by AI.
And this all raises a really crucial question for you as you process all this information.
Yeah. How do you balance the insulating power of that immense cash reserve, which can shield the company from short-term shocks, against the execution risk? Because they have to deliver on that big upside surprise in the cloud business, especially with more competition in the AI space. One guarantees stability, but the other requires perfect execution for that massive growth.
In understanding that tension, the weight you place on guaranteed fundamental stability versus high-stakes forecasted growth, that's the real challenge when